live.
All right. Thank you, Mike. Welcome, everybody. Hello to the Equilibrium, the EOS, and Bancor, and broader community. We're excited to have you today. If this is your first time tuning in, this is a bi-weekly session that the Equilibrium team hosts, where we like to reach out to our partners, to the greater community, and help talk a little bit about what's happening and get an insight on everything that's moving and pushing this industry. And we do this in the form of an AMA, or an Ask Me Anything session, talking around the broad industry of technology. And so if this is your first time joining our AMA, the way it works is you can jump into our Telegram chat, and there you can ask questions live. And if they are relevant to the conversation we're having, we'll bring them up with our guest. If not, we'll save them for the end and try to get them answered in the time that we have allotted. And so, again, the idea is to ask our guests anything, and myself and the team as well. Also, for those who may be joining for the first time, a little bit about Equilibrium. We are a decentralized framework for generating asset-backed stablecoins and the next generation DeFi, or decentralized finance, applications. And so, also to mention, as you participate today in this session, the winner at the very end, our guest will choose the best question that they feel was asked during this session. And the winner of this will get the chance to receive some tokens, and those can be either kept as a reward or donated to a local charity of their choice. And we have a few that we've selected as well. But without further ado, my name is Kyle. I'm part of the Equilibrium team here, and excited to host our very, very wonderful guest, who I've had the pleasure to speak with today, Nate Hindman, the head of communications over at Bancor Networks. And if you haven't heard from Nate, his background and what Bancor does, he's going to tell us all about that today. Welcome, Nate.
Thank you, Kyle. Happy to be here.
Awesome. We're happy to have you. So, Nate, a little bit more about you. How did you get into this space of, blockchain and decentralized everything, but also a little bit about your background. Where did you start, and then how did you lead into this industry?
Yeah, so I actually started my career as a financial journalist in New York. I was working for the Huffington Post, covering business and financial issues. A lot of stuff around the time when sort of crowdfunding and platforms like AngelList and Kickstarter were really starting to take off. So covered all the sort of lobbying and the sort of legal frameworks around equity-based crowdfunding and all that. So was it Huffington Post for a bit, contributed to Wall Street Journal, The Atlantic, and started getting very into startups and technology. So decided to go back to school to learn how to do programming and coding. From there, started doing some mobile development, joined a few startups that got acquired, and then sort of came across, like many of us, crypto, and specifically Ethereum. And the sort of financial background I had with sort of studying crowdfunding, and things started to go full circle then, and really just dove deep down in there in the space, probably around early 2017, and joined the Bancor team in late 2017, early 2018, and have been with them since then. It's been a wild ride in crypto, as many of you know. And but it's really blended a lot of my passions, from economics to finance to programming and technology and startups. So yeah, knee deep in it at this stage.
That's awesome. And so, what made you choose Bancor? At the time, was a very exciting new project and kind of coming into its own in the landscape. What made you choose them over everybody else?
Yeah, Bancor started off by doing a lot of interesting work in community currency, in the community currency world. This idea that economies would function better if we had many different types of money. There wasn't a sort of monopoly on currency. And so they started building community currency projects. So that's really how I came across it. And the solution that they provided to community currencies was a liquidity solution. You know, a lot of the way currency systems work based on this sort of traditional order book bid-ask model, those tend to fail a lot of early stage, low volume currencies. So a solution that Bancor came up with, which is bringing automated market makers onto the blockchain, that allows really the liquidity model fits sort of these early stage, low volume currencies way better. And so there are these community currency pilots in Africa, in Israel, and really started tuning into them around that. And so that was the sort of beginnings of Bancor, based around this sort of new liquidity model for low volume currencies that has since grown into a sort of DeFi DeFi protocol that now has processed billions in trade volume with thousands of users participating in the system. But really, how I came across it was that community currency angle and pilots that they were running in the early stages.
So let's go one level deeper on what is community currency, and the reason I ask is the word currency is being tossed around a lot right now. Right, we have the idea of these, central bank currencies. We have cryptocurrencies. We have digital currencies. We have all these things that use the word currency in them. But Bancor is doing something very unique. So, for you guys, what is a community currency, and what does that look like and mean?
Yeah. So, I guess the easiest way is to kind of step back a little bit. One of Bancor's kind of founding fathers, I guess you could say, a chief economics officer who used to be, a real big deal in the, he headed the central bank. He actually helped create the sort of predecessor to the euro, and he was Bancor's chief monetary officer, and his name is Bernard Lietaer. And he was sort of, a pioneer of community currencies. And he had this theory that economies are sort of like natural ecosystems, where there's a trade-off between efficiency and resilience. Now, an efficient sort of natural ecosystem would be one type of animal and one type of food, right? And you can produce as many animals would grow as fast as possible because you have this one source of food, and that's a very efficient ecosystem. But once that sort of food source is cut off, the whole ecosystem dies. So there's an amount of diversity that we need inside natural ecosystems in order for them to be resilient. So they might have some trade-offs in terms of efficiency, but they're really more resilient ecosystems. And now let's transfer this into the economics world. In the system that we currently have, where there's one type of money leading to kind of a sense of perpetual growth. Now, this is very efficient, right? One type of money, we can easily do trade. Commerce is more efficient, and it's a highly efficient system. However, when there is an issue with the economy, and that source of money starts to falter, everything is sort of connected, and everything in that economy suffers. However, when you have multiple different types of currencies, a diversity of currencies, what you might trade off in sort of a very efficient system, you get more resilient systems. Whereas if one of those currencies is failing, the others might be lifting up the economy. And so it's the idea that local communities, local neighborhoods, local organizations, nonprofits, even companies, private companies, can and should have their own currency to create this sort of diversity of currencies that will lead to a more resilient financial system.
Okay, so it's a balancing act, is what it sounds like, which is pretty exciting, and that's I would say that's pretty unique to where this industry has been going, and leads into kind of that bigger overarching term that we all have said or talked about or even thought about in the idea of decentralized finance, and how this may play a role in that. Before we get too deep, let's take a step back as well. And for you, we talked a little bit about this beforehand, and know that you're very passionate about economics. What is DeFi, right? What is decentralized finance as it stands today? Before we look ahead, what is it today?
Yeah, so I think it's the idea that you can really rebuild financial services with large groups of users providing the liquidity rather than a small group of sort of institutions or companies, so that we can create financial services without an intermediary, without a bank, and really by putting everyone's idle assets to work in order to kind of create the rails for such a system. So if you sort of look at the major branches of what we know as DeFi today, you see lending, synthetic assets, insurance, and then I'd say decentralized liquidity or decentralized exchange makes up that sort of fourth branch. And that's where Bancor is really, really focused.
Okay, so you guys are so beyond finance, we have these other areas, and you guys are looking at the decentralized exchange points. Before we dive into that, I want to jump ahead of a question we had come in, and that's why is now DeFi's moment in the spotlight? Why is all of a sudden today, here in the early of 2020, is DeFi the biggest thing talked about that's out there?
Yeah, I think like many things in technology, we can sort of dream faster than we can build, right? And in many ways, it felt to me that the crypto and blockchain industry got a bit ahead of themselves. Even Bancor's visions of community currency, they're still evolving. They're still pretty far off. But when we thought of this idea of the world computer, right? Let's get all these social networks, Airbnb, Uber, let's get it on the blockchain immediately, right? Like we got a little bit ahead of ourselves. And DeFi to me is sort of returning to crypto's original roots, which is generating yield and interest and really making money and financial services. So before we have the games and the sharing economy and all these things built on blockchain, it feels that we really need to nail this use case. And I think it is a refocusing of the crypto and blockchain community on this use case, specifically of financial services.
I like it. So now, kind of jumping back to your answer about these additional branches, because I think you're right. We hear about only a few of them, but this new branch or this emerging area of DeFi where you guys are focused is decentralized liquidity and exchanges. So some is referred to as DEX, right? DEX. Tell us a little bit more about that. What is a decentralized exchange? What does it mean to have decentralized liquidity, and why is it decentralized versus centralized, right? Just to start from the beginning.
Yeah, I mean, if we go back and look at these sort of major branches like lending, synthetic assets, insurance, they're really tied around generating yield for everyday users, right? And then we get to decentralized exchange and we're like, okay, exchanges are used to trade assets. How are they a generator of yield for everyday users? And that's really what Bancor pioneered in late 2017 and that we're really seeing explode today, which is this idea of decentralized liquidity, that you can build exchanges where it's not just professional market makers or institutions that are providing the liquidity, but it's thousands of unaffiliated users that are providing liquidity to an exchange in return for a share of the trading fees. So previously, this idea of market making, providing the liquidity that allows order books to run or trades to be processed on exchange. This is something where there is a technical barrier and a capital barrier. And it's why in all asset exchanges up until recently, and that holds also for decentralized exchanges, we've seen the liquidity provision sort of become centralized amongst this small group of professional market makers. Because if you wanted to run, a market making bot on, stock exchanges, on centralized exchanges in crypto, or even in decentralized exchanges, you have to be an advanced trader. You have to be an algorithmic sort of Goldman Sachs, MIT guy to really extract those spreads. But what Decentralized Liquidity in Bancor has done is it says through these automated market makers that any user in just a couple clicks can take their idle assets, put it into an automated market maker, and that way they're buying into, we also call automated market makers liquidity pools, but they're buying into that in exchange for a share of the trading fees processed by the automated market maker. So, we can dig in there, but the big takeaway is that we can now build user-owned exchanges where the liquidity sources are decentralized across thousands of different unaffiliated users, as opposed to this small group of professional automated market makers that provides liquidity. Because, and last point here, if those professional automated market makers go down, the exchange goes down, right? If you can't trade without liquidity on order books or on an exchange. So it's removing the centralization of liquidity within exchanges.
Got it. Okay, so we have a great question that just came from the community around this, but I want to take it one step further before we get to Cody's question. Is this is all wonderful, but why? Why would a user do this? What's the bigger appeal than just a share of trading fees? I mean, how does a user even start or begin to get involved in this? And again, why would they? And what's that bigger appeal for them long term?
Yeah, sure. So let's first answer that by saying, why do we need liquidity, right? Why do we need liquidity in a token? Well, if you don't have liquidity in a token, two things happen. One, it becomes expensive to trade the token through something called slippage, or there's very large spreads if you don't have high liquidity on an order book or on an automated market maker. And two, it's very easy in a low liquidity token to manipulate the price. So people can run things like pump and dumps, wash trading, spoofing. And so you can do all sorts of, bad stuff to the price. So we want liquidity in tokens, right? The token project wants it, and users who hold the token want liquidity because they'll be able to easily trade the token without a high cost, and also people won't be able to manipulate the price of that token, okay? So that's why we want liquidity in a token. Now, why would a user stake liquidity? Well, one, they want to make money. They generate by putting your money, your idle assets into an automated market maker. Each trade that's processed by that market maker, percentage of the trade is redeposited into the liquidity pool, and that's shared 100% amongst the people that are holding liquidity in that automated market maker. So that's the first reason of why our user would do it, is to generate yield. And in some of these liquidity pools, we're seeing APR upwards of 10, 20, even 30% in these automated market makers. So there is an attractive investment. Now, secondly, if you're holding a project's token, first off, it might just be sitting in your wallet and idle, right? You want to put it to work. You want it to make money. So why not just stick it in an automated market maker? And two, you want that project to have a liquid on-ramp onto its system, right? You want people to be able to easily enter and exit the system through their token. If there's high slippage or high costs, or they're not even going to be able to exit because there's no one who's willing to buy it on the other end, this is a big problem. So automated market makers and decentralized liquidity really allow that liquidity to come from a token community, right? That the people within that community who are holding the token, instead of just holding it in their wallet, they can just stake it onto a decentralized liquidity network like Bancor, and they can contribute to its liquidity, which is beneficial for the entire token community.
So this is very similar to, for those that are tuning in, where they've heard the words staking or other projects that refer to rewards for staking. This is a very similar process, right? It may have a different term in how we're talking about liquidity and liquidity pools, but at the concept, at its base, this is staking and being rewarded.
Yeah, I mean, if you think of like the parallel with blockchains, first off, yeah, you can stake on blockchain in return for rewards. I also like to think of the liquidity providers on an exchange as sort of that exchange's miners or that exchange's workers, right? They're contributing work, a resource, liquidity, in exchange for a fee, in exchange for trading fees. So these liquidity providers, the liquidity providers that are on Bancor are essentially Bancor's workers or Bancor's users. And we can get into this, but by contributing liquidity to Bancor's pool, they also become part owners of the protocol because you need to hold BNT or its stable derivative, USDB. You contribute to pools in equal amounts BNT and the token you're providing liquidity to. And your holding in that liquidity pool now entitles you to vote on key attributes in the Bancor protocol. And we can delve into that, Bancor's evolution into a DAO, but you also, so you're not only a worker on the system, but you're also an owner in the protocol.
Love it. Let's hold on the DAO talk because I do want to get to that, and we've had some good questions come up. But Cody has patiently waited. So sorry, Cody. Cody had a question. What are some of the challenges of putting real-world items like commodities in liquidity pools?
Yeah, we're seeing tons of interesting innovation there. And I see more sort of green pasture and blue ocean opportunity than I'm really seeing as challenges because the sort of first challenge people would think about is KYC and AML, but you really can build a sort of regulatory compliant layer on top of liquidity pools. So we are seeing tons of projects and some that are launching very soon that I'm really excited about, which are basically allowing security token exchanges to be built on liquidity pools, on automated market makers. So, and these also sort of allow you to get exposure to assets, just like the S&P 500. So you can be buying and selling a Tesla stock from a liquidity pool, quite soon. And also you could be staking your, synthetic Tesla stock into that pool and generating fees and revenue off the trading of that synthetic Tesla stock on these sort of regulated security token and synthetic asset exchanges that are based off of automated market makers. So there are challenges, but there's tons of amazing opportunity there. And anyone who's interested in building those types of products, I'd really encourage you to reach out to Bancor because we're helping existing projects in that space now.
And this may be overstepping, so answer to the best of your ability. But one question we did have come in is kind of how far off are we from seeing such a world in that matter, right? Going back to that DeFi initial conversation and now talking about this, is this something with those commodities or generalized traditional securities of today? How far off in the future do you think we are?
I think so. We're roughly -7 days off because last week one of the first Forex trades occurred using a liquidity pool on a exchange called Jarvis. So Jarvis.exchange. Check it out. It's based on liquidity pools. They also have a live pool on Bancor where they airdrop incentives onto. So check out Jarvis.exchange, but that is a live security-based exchange based on liquidity pools and super cool. And so we'll see more and more projects of those coming to market.
All right, Cody, high five so far for such a good question. All right, so furthering on from that, going back to DeFi, where do you see DeFi going, and kind of what is Bancor's role in this bigger bigger world of decentralized finance. We talked about the liquidity pools and exchanges, but beyond that, where is the roadmap going for Bancor, and where do you see the industry going and shaping up?
Yes. So I think we're seeing a very sort of interesting shift in a lot of these DeFi protocols that if they didn't start as they didn't start with tokens, they're launching governance tokens. And if they started with a token in a foundation model, they're shifting towards this DAO, this sort of DAO-esque model. So I think, we're at sort of a DAO or die phase of DeFi and crypto in general, where you really have to decide whether you want to be a regulated for-profit business or you want to be a decentralized exchange where upgrades and really the evolution of the protocol is dictated by its holders of its token or participants in its DAO. Mm-hmm. So I think that's a very, very interesting phase. We've seen, Compound just said they're going to launch a governance token. Bancor is evolving into a DAO. Synthetics is another DeFi protocol that is really on the cutting edge of sort of the push towards DAOifying. So that is definitely a big sort of mega trend I see in the DeFi space. We can celebrate hitting the sort of 1 billion mark. That's a sort of big theme, at least in the Ethereum DeFi world. And then it's sort of, there's tons of challenges too, because the real beauty of DeFi is its composability. It's that, you can build these incredible on-chain financial products that involve so many different protocols and systems, and you can really just create really cool and weird and very lucrative financial instruments. At the same time, when things are so intertwined and composable, there's increased risk. Actually, we saw in the BZX recent hack that the hacker used a bunch of different DeFi protocols to pull off what was a pretty astounding attack. So we really need to balance the sort of risk with composability, because DeFi's greatest advantage could also be a big downfall. So those are kind of some mega trends that come off the top of my head in terms of sort of where the DeFi space is headed. But I do see tons and tons of excitement and development across all different blockchains, focused specifically on these financial services and making it so it's thousands of different users that are running them as opposed to a central entity.
And this is a good kind of check in on the terminology side. Part of why we do these is not only just to check in with all the great players in the ecosystem, but also kind of refine terminology. So DAO, what is a DAO? How do they work or how they operate? If we could go into that for just a second.
Yeah, I think really sort of the key to a DAO is that anyone can become a member, right? So there's not a central entity that can block someone from becoming a member. Anyone can, once they are a member, participate in some sort of governance or some sort of process to affect the protocol. And the third prong is that there's really a reward generated from participation in the network or in the DAO. So and also that the it's really autonomous, right? That the changes that are voted on, or the upgrades, or the things that are voted on in that network really take place on chain. Whereas if there is consensus in whatever consensus model is utilized, that those changes are happening not through some guy that's saying, okay, this is what this group has decided, I'm going to go program it into this, but it's really connected to the network. Whereas if you're holding this amount of tokens and there's been consensus reached through, a majority of token holdings, then that automatically is changed within the system. So for Bancor, you can think of that. You can think of sort of the three key roles of an exchange, or core operations of an exchange are listing tokens. So anyone can list a token on Bancor simply by creating a liquidity pool, and there's no central party. It's completely self-serviced. You can do so on platforms on EOS. There's one called X Nation. On Ethereum, there's CoTrader, but there's all these different interfaces where you can now create your own liquidity pool. So that's the listing. And then if you think of an exchange's second operation as sort of the order matching, well, that's something that happens autonomously through automated market makers and Bancor's smart contract infrastructure. And then the third is sort of the DEX, or the exchange revenue, and the circulation of trading fees. And that's also happening autonomously through a user staking in a liquidity pool, generating something called a pool token that accrues value based on the fees that are generated in the automated market maker. So in that case, Bancor, in a sense, really functions sort of currently as a DAO, kind of naturally as a DAO. Now it's just about the sort of upgrades to the protocol. And how do we make it so that the community is affecting those upgrades, and really any changes that we are making to the protocol. One is staking rewards that we're launching soon. How do we ensure that that is really being voted on by token holders and by liquidity providers on Bancor?
And just had a question come in on that note, and from Cody, who's just dropping the hits today. Good job, Cody. About does Bancor plan to use liquid oracles, and what benefits in utilizing? Would there be any benefit in utilizing other DApp networks, so decentralized application network services?
Yeah, so we have an announcement coming soon. I can't share too much now, but we will be utilizing an interesting Oracle system to help improve the Bancor's stable coin called USDB, which is backed by BNT. And so we have a very cool announcement, but a short answer is yes. Oracles are super fascinating space right now, and it's Bancor will be sort of utilizing what the ecosystem is bringing to market there.
I love it. Awesome. Well, we have another question back on the DAO circuit, and the idea that anyone can participate or vote or be suggesting of changes. So D brings up this question about NFTs, right? Non-fungible tokens. So is there any plan for Bancor to work with NFTs or NFT markets in the near future or currently?
Definitely. So Bancor is sort of this liquidity model shines with both tokens and assets that have low volume. So we think there's a perfect fit between the sort of Bancor protocol and automated market makers and providing liquidity to NFTs. So we are in active talks with NFT protocol builders and NFT platforms to make Bancor sort of function with those NFT protocols. So also stuff that's coming down the pipeline, but we need to focus, right? And we have our work cut out for us in the next couple months. But in 2020, I'd say closer to the second half of this year, we'll definitely have some cool announcements there, and hopefully some of the development work that's happening behind the scenes with some of these NFT protocols will come to fruition.
Exciting. And speaking of 2020 and kind of this, I would call it almost redefining year for blockchain technology as a whole. Let's talk a little bit more about these community-driven or the decentralized exchanges and how they may benefit from the 2.0 or the next version of blockchains that we're starting to see. Right, we've had already gosh, it seems like we've gone through almost the entire year in 2 months, but we've already seen a number of announcements or releases of new updates and new releases of protocols. How do you see community-driven exchanges, or again, DAX, decentralized exchanges, working with the 2.0s and getting into the future of where maybe proof of stake protocols play a role?
Yeah, so the power of Bancor is that it functions cross-chain. Currently, we launched on Ethereum and built a cross-chain bridge as a POC to EOS, which allows for cross-chain liquidity and cross-chain conversions. On Bancor, I can take my EOS-based asset, convert it for Ethereum, and back and forth. And some decentralized exchanges or decentralized liquidity networks decided to use a blockchain level asset in their liquidity pools, and Bancor, for a number of reasons, one of them being cross-chain, decided to use BNT, which enables these sort of cross-chain mechanics to work. In order for these trades to occur, you're minting BNT on one chain and burning it on the other to keep the fixed supply of BNT stable with these cross-chain conversions. So Bancor really, its power is in operating across blockchains and really floating to blockchains where there are tokens that need this new form of liquidity, especially in new blockchains where you have new token projects and new networks launching that need this sort of liquidity of first resort. The Bancor model is really perfect for them. And so on EOS, we're very excited to launch sort of these interfaces now that allow you to stake inside EOS-based liquidity pools. There's a portal called X Nation built by EOS Nation. So the EOS Nation team is really awesome and becoming really sort of the gurus of liquidity pools on EOS. And so they're launching xnation.io, where you can create a pool and also contribute to existing liquidity pools. And so this is something that's possible on Ethereum through interfaces like Zerion and 1inch and Paraswap, and coming to Bancor.network itself soon. So, in short, liquidity provision is not necessarily something that I'd say benefits from at this stage too much from high throughput, high transaction volume blockchains. Mm-hmm. However, any sort of side chain or new blockchain that is launching where there are early stage and even any token that needs liquidity, Bancor can build a bridge to, and we have new blockchains that are coming pretty soon. We have a very cool announcement coming tomorrow, specifically related to Crosschain and different blockchains. So that's my kind of short answer, is that the blockchain really doesn't matter. Bancor can be ported to any chain through its cross-chain bridge and through a number of sort of cross-chain solutions that are coming to market.
That's exciting, and I'm excited to see this new announcement, and I know the community is as well, as to kind of where things go and what that new release is going to be. But also, this is something
tomorrow. Keep an eye out.
Coming tomorrow. We'll make sure to share it with the community, and this is something we've been considering here at Equilibrium, as well as the idea of going cross-chain. And I think myself and the team have talked a lot about the future of interoperability and the importance of those bridges, because there won't be, one chain to rule them all per se, right? There's many different types of applications, use cases, blockchains themselves, and protocols that will be used for different things. And, being able to cross chain through all of them is going to be important. It's very similar to the DAO effect, right? DAO or die. I think that's going to be kind of the next step in this industry. Is you've tested, you've proven, hopefully, and now that you've proven, the next is how do you evolve and how do you connect the dots? Get outside of the sandbox and start to connect back into the world and allow for more access and more opportunities.
Definitely, and I think we've seen gaming in particular, lend itself to the EOS blockchain and also to Tron, and gaming and sort of decentralized liquidity and in-game assets, NFTs. There's huge overlap and huge opportunity. As a gamer, as a game creator, why can't I just easily create an in-game asset? And have my users buy it and that become liquid not only to other gaming assets within whatever platform, but also to other mainstream currencies and eventually to fiat. And doing that through an order book based exchange model just doesn't work. The order books fail these sort of small, low volume tokens. We're also seeing this in the personal token space. So you really need an automated market maker liquidity model, which you can always buy and sell the token from the contract. You don't need a counterparty to do it. And as these sort of gaming ecosystems evolve on different blockchains, we're very excited to have Bancor sort of deeply integrated there to provide liquidity to those in-game assets.
Well, and even gamers can play a role in that, right? Let's look at the world of eSports. Take out the game creators and go to the gamers themselves, right? You're a professional athlete or professional player. You may want to digitize certain things, right? And sell what we'll consider digital merchandise, right? Where you want to be able to sell stickers or in-game assets yourself to generate additional income, or just to kind of build your brand, whatever the case. Gamers, I think, play a role. I just wanted to add on. I know you went to the game creators, but I wanted to add on. I think in the esports world, there's a very unique opportunity, and excited to see how Bancor plays a role in supporting that. The growth of the community around NFTs. Back to Dee's original question as well. So.
Definitely, yeah. Personal tokens where people are selling their time or, certain perks within their system, access to premium content. There's no question that personal tokens are going to be a major sort of place for growth in this year, next year, and going forward. And again, personal tokens don't work with a permissioned order book based exchange, right? If I start the Nate token, I'm not going to be able to list it on Binance because it's going to cost a lot of money. And if I do list it on Binance, no one's going to buy it because they don't know that they can sell it. They'd be taking massive counterparty risk, right? But if I start the Nate token, I can just permissionlessly, with no central party, create a liquidity pool on Bancor, and all of a sudden, embed a conversion widget on my YouTube channel, and anyone can buy that token, and also anyone can contribute liquidity to the token and generate fees from the trading revenue. So there's no question that personal tokens are going to be huge, and there's huge overlap between personal tokens and gamers too, because streaming gamers are they get crazy views, right?
Right. And there's already, we'll call it not necessarily a centralized model, but there is a version of those personal tokens. Gamers is the great example, or influencers, right, who get paid to stream or get paid to interact and engage with the community. And in doing so, right, they receive some kind of reward. Now, throw in this world of personal tokens, liquidity, staking, underlining Bancor. That's my own personal shout out for you guys. You being the underlining asset, well, now you've got this future ahead, right? So not only does a brand come to me and say, hey, you're an influencer, we want you to stream when you play this game, but now I can have the Kyle or the Nate token, and they can purchase that in addition to my streaming fees, in addition to other ways I can generate revenue through those streams, through those NFTs or my own personal tokens, etc.
The real crazy part is, you can think of Patreon, right? Subscription based. So I pay you dollars to get access to your premium content. right? But what if in order to access your premium content, I had to be a holder of a certain number of your tokens, right? But what's really crazy about that is, the way these sort of bonding curve-based or automated market makers work is the more people that buy the token, the more the price goes up along this sort of predetermined curve, right? And so what if all of a sudden, in order to access your token, sort of access your services or your content, I need your token, and I can actually see upside from that token, that the more demand for your content, the more people will need to hold the token, and the more I'll see my own token holdings, my own Kyle tokens moon, right? So personal tokens, yeah, amazing stuff, and it's still a little early. No one's nailed this yet, but we have the primitive, which are automated market makers, to make it work.
Well, and we're just like decentralized finance for DeFi, right? And even dApps, we're working through this. This is all very exciting, all very new in some cases, or the beginning of a big evolution. So a lot of trial and errors and a lot of use cases out there. But we did have a good question come through, and I think this is relevant to kind of the liquidity conversation we've been having. So what would be the simplest way to explain the differences between Uniswap and Bancor?
Sure. Yeah. So the simplest way is that they both, first off, Bancor was around very early, right? And Uniswap forked Bancor's code, essentially, and replaced BNT with Ethereum. So within each one of Uniswap's liquidity pools, there exists the ERC20 token that's receiving liquidity, and Ethereum. Within Bancor's pools, there is BNT and the ERC20. So why would you use a protocol level token a protocol token instead of a blockchain asset in your liquidity pools? There's probably three sort of big advantages to using a token like BNT. The first is what we covered, which is cross-chain, right? We can easily process cross-chain conversions by burning and minting BNT, and so we can connect to any chain. In order to do that with a blockchain asset, you have to wrap each trading pair, and it becomes way less efficient to expand cross-chain. The second is, and this is really sort of gets to the core of tokenomics and the sort of why a token, but it's really the network effects. That Bancor's protocol usage, the more liquidity that's added to the Bancor protocol, that has a direct impact on the price of BNT. If I want to stake in a pool, I need to acquire BNT. So every person that stakes puts upward pressure on BNT, right? And so by that, when I stake in a liquidity pool on Bancor, every other pool on the network becomes more liquid. Okay, now ETH, right? ETH is subject to all sorts of fluctuations in its price. So if I stake on Uniswap, there may be a small correlation by the amount of liquidity that's staked on Uniswap, but it's a very weak correlation. Pools and that asset Ethereum could grow for all sorts of reasons. Whereas when you're staking on Bancor, it's having a direct impact on the price of BNT, and those are those crucial sort of network effects. And the last thing is protocol level rewards. So Bancor in Q2 of this year will incentivize users who hold BNT to stake it in liquidity pools because they will receive BNT staking rewards, which will be funded by BNT inflation. The inflation will be voted on by the DAO. But essentially, this is really increasing your incentive to stake in these liquidity pools, because if you just hold on to your BNT, it's slowly going to get diluted. But if there's inflation on it and you're receiving those rewards as a liquidity provider, it really encourages everyone to sort of put their tokens to work, and also increases the ROI of staking in Bancor liquidity pools. You're going to be getting higher yield if you're getting these staking rewards airdropped on your pool. Doing protocol level rewards through ETH, it's way less efficient. I wonder if, how that would even work. You would have to mint sort of new Ethereum in order to fund those staking rewards on Uniswap. So, the rise of Uniswap has been awesome to watch. We've seen a number of automated market maker based innovations come to market after Bancor really launched them in late 2017. But there are, we think, very distinct advantages to having a protocol token like BNT, and that is really the main difference between Bancor and Uniswap.
Love it. Great answer. And another question we just had come in too. So decentralized finance right now is primarily, from what we hear and see, right, is primarily focused around and built on Ethereum. But there's a lot of efforts going on, EOS and many others. Do you see this as something that will grow? So DeFi being built on top of EOS, maybe other chains as well. Like, where do you see this underlying infrastructure start to mature beyond Ethereum? And again, just for everybody, we know there's different ones. I just want to make sure that this question gets asked as well. So,
yeah. I mean, to some extent, I'd say EOS might have the largest DeFi project, which is Rex, right? Lending out idle EOS, it's at the core of the EOS blockchain, and Rex is actually based on automated market makers on Bancor, on the Bancor protocol. And so, it's really at the core of the chain. We're starting to see projects like EOSDT, I think Vigor is one that's launching soon. And so there's several other projects that are starting to launch these sort of DeFi style protocols on EOS. We're seeing the same type of behavior on Binance Chain, on Tron. So it feels like a chain agnostic, and also on Bitcoin too. We're seeing DeFi projects alongside Bitcoin and also cross-chain bridges that are enabling Bitcoin users to put their assets to work in different chains. So it's this idea that let's not leave these assets in our wallet. Let's use them as the fundamental liquidity layer in financial services. Mm-hmm. And that really strikes me as a sort of chain agnostic movement and trend.
So we all do this for a reason. We all enjoy this. We all build this exciting technology for something. But at the end of the day, it means nothing if it doesn't reach mass adoption in some way, right? Whether it's infrastructure, it's consumer facing, it's enterprise, it doesn't matter. So in your opinion, one of the questions that we had is, what are some of the real world use cases that can lead to mass adoption for blockchain, digital currencies, the liquidity pools, all the stuff we've talked about? What do we need to see happen for mass adoption, and maybe even when that can occur?
Yeah, listen, like I said in the beginning, I think we got a little bit ahead of ourselves with thinking that overnight we were going to have Airbnb and on the blockchain, and payments also seem very far off. I think the key to mainstream adoption at this stage is nailing the use case of financial services, right? There are so much pent up demand in the world for the kind of, first world financial services that a lot of Americans have access to. And there's a lot of also Americans that don't have access to these services. And so the lending, the borrowing, this seems like something, and also the exposure to, public market stocks, private market synthetic stocks. So being able to invest in a startup in its earliest stages, in a blockchain network in its earliest stages. So these are all things, hyperinflation affecting people's ability to to provide for their family. And so to be able to sort of store your money in a stable, decentralized asset that doesn't rely on a bank or a government, there's so much pent-up demand for financial services globally. And, I think if blockchain and crypto can really nail that use case, it will lead to this mainstream adoption. And I really feel at this stage, people need to see that you can generate real yield and real interest in these projects in a trustless and relatively safe manner. So, all of a sudden, whereas Bancor started off as serving these everyday users who want to stake in liquidity pools, it was sort of seen as a toy back then. And now we're getting, these institutional players knocking on our doors, asking, how do I get this type of yield or revenue that we're seeing from some of these really high-performing liquidity pools? And so once you have this institutional money coming in that can really sort of, help sort of form this sort of new financial services layer that I think is key to sort of nailing the sort of mainstream adoption use case. And so I'd like to see development focused. I love all the other stuff that's happening in blockchain, but I really think the key will be through the financial use case.
Got it. And want to get to a few more questions here as we're coming to the end of the session. And thank you everyone from the community for the continued great questions. We've got a few minutes left, so feel free to drop them in the Telegram chat as we get to our lightning round here shortly. So Nate, one question, and I think this is relevant because Bancor is doing so much. At the same time, there's so much happening in this industry. It changes what feels like on milliseconds every day. We had a question from the community: is what's one of the common misconceptions that is out there about Bancor that people are talking about that you guys do or don't do? I think that's a good question for everyone to know exactly what they can come to and expect from what you guys are building.
Yeah, so I'd say that Bancor, the most common misconception is Bancor is exclusively for trading assets, where that is key and that's really interesting. But, I think potentially more interesting is that Bancor is also a place where you can own a piece of an exchange and generate revenue off of that exchange. And that's something that you really were never able to do before as a liquidity provider, as a staker. So that's one sort of misconception, is that we're exclusively a trading exchange. It's also a place where you can get yield by being a liquidity provider. Another is that BNT, why use BNT? A lot of people, in the initial stages said, why not use Ethereum? Why not use EOS? Why not use a blockchain level asset? And those points that I said earlier of cross-chain interoperability, of the network effects that you get when you utilize a protocol token, and also the sort of staking and protocol level rewards that you can provide, I think we're really starting to see the reason why Bancor was built around a protocol token. I'd say those are the main sort of misconceptions about the project that hopefully we're doing an increasingly good job of clearing out.
All right, quick lightning round question. What, outside of Bancor, what is maybe one? Oh,
last misconception. There's this number we always hear, $150 million. Bancor raised $150 million. So, that's not totally true. First off, that was $150 million in Ethereum at the time of the price of Ethereum, first off. And secondly, about 50% of those funds first went to the community reserve for BNT to support buying and selling of BNT. And secondly, there was a buyback that if the token price ever hit a certain number, users could buy back at that price. So almost immediately, you're closer to 75, 80 million. And thankfully, Bancor was able to diversify a lot of those funds and still has a really strong runway ahead of us. And we're really looking forward to being kind of more transparent about the treasury management and treasury funds as we roll out this DAO. So that's just another misconception I wanted to clear up. That Bancor, has $150 million. It's all sorts of things took place that were built into the system purposely that led to that being less, and so that's just worth addressing.
Well, thank you. No, very, very appreciative. I know there was a few questions from the community that just came in about that, so appreciate that we got the chance to answer it. But lightning round question.
Yeah.
Outside of Bancor, favorite or most excited project that's on top of mind right now?
That's online.
That's on top of mind. So what else is getting you excited that you might be hearing about project-wise aside from Bancor?
Yeah, I'd say the personal token stuff we spoke about is really fascinating. And there's a Bancor integrated team that's working on that called DWEB, DEWEB. It should be launching, going public pretty soon. So shout out to them. There's other personal token projects that are going on. So I think that is a just total new paradigm that blockchain and crypto introduces. So definitely personal tokens.
I love it. So Nate, thank you so much for joining us today, and thank you to everyone in the community for your questions, your time, and also tuning in with us here at Equilibrium, and Nate from Bancor. Again, thank you. And Nate, can you give everyone a shout out of where to find you, where to find the company, and then also if they have other questions and follow-ups, where they can go?
Sure. So I'm at Nate Hindman on Twitter. If you want to ping me on Telegram, always feel free. My DMs are open at Nate Hindman as well. Bancor is at Bancor on Telegram. And also, if you really want to get an inside view of the building that's going on, it's at Bancor Developers. We're always happy to have people join and educate them on the protocol. So that's where you can find us.
Awesome. And again, Nate, thank you so much. And thank you to the entire Bancor team for all the exciting things that you guys are working on and developments that are helping to push this.
Last plug. Keep an eye on xnation.io. Finally, EOS users will have a self-service way of creating liquidity pools on Bancor and contributing to EOS-based liquidity pools. So xnation.io. We're excited to see an EOSDT pool really explode, and I think that's a place where it can happen.
Love it. And everybody, we'll be back here in just a short little bit on March 18th at 1:30 p.m. EST, where we'll be hosting yet another great, exciting guest in the space, Thomas from Provable. So tune in, make sure to get your questions ready. And again, Nate, Bancor, thank you so very much for the time today. And with that, everyone have a great day.
Thanks so much, Kyle. Take care.